Good afternoon. My name is Eddie, and I'm the author of the ebook Trend is Rent. The date today is the 3rd of November 2022. It's Thursday, and the time is 12:37, just after the close of the first morning session of Bursa KLSE. I welcome you to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. Disclaimer first though, whatever is shared here is purely for information and education. If you should consider to buy a stock after hearing my sharing, please consult a financial planner or a broker. The stock today in question is E-frame. Okay, the criteria for choosing E-frame as the best stock pick is based on price gain, trend confirmation, and its momentum is above the cloud and MA 200, or in this case 233. It has a relative volume greater than 1 and is a profitable net cash company. If you look at my uh, chart here, you can see that today two stocks actually are triggered, E-frame and Kotra. But amongst these two, E-frame is chosen as the best. Okay, now let's go on to consider the fundamental rationale. First, we look at the financial summary. On a quarterly basis, profit margin maintains, but on an annual basis, you can see that the profit margin represented by the orange line has increased quite tremendously from 2021 to 2022. Okay. Uh, on the balance sheet, on a quarterly basis, uh, on fourth quarter, there is actually the debt to asset is equivalent to the total asset in green. But on an annual basis, you will see that actually, although the debt has increased somewhat, but relative to the total asset, uh, which we can say that is that likely this increase in debt is probably for capex and growth measures. All right. On cash flow quarterly, it is indicative of a good cash flow generated by the operating the core business of E-frame. On an annual basis, we can see that base represented by the operating cash flow as indicated by this orange line, it has also increased from 2021 to 2022, and from the financing basis in 2021, the cash flow from financing has come down to below all the rest. Okay, so it's indicative of a good management. All right. However, from the dividend perspective, E-frame does not pay any dividend last year. All right. Uh, However, previously when they were doing well, they do pay some form of dividend. The trailing 12-month dividend is 0.79%. All right. Ex date May 2022. All right. Now let's take a look at the other. Okay, rational on the annual basis. Okay, let's look at the current. All right. As usual, we will now calculate the intrinsic value of E-frame. Let me call up my calculator. Of course, you won't see my calculator. Only me on my screen. I will, however, tell you the value, all right, and compare to the current market price of 65.5 cents. Okay. To calculate the E-frame intrinsic value, we look at the enterprise value. Okay, over here, which is 17848 million. Okay, 17848 divided by the total common share outstanding, which is 32500. Okay, so the intrinsic value of E-frame is 55 cent against its market price now at 65.5 cents. So it looks like we are paying almost a 10-cent premium. So, okay, so 55 minus 0.655. Okay, you are paying a 10 11 cent, okay, 10.6 cent, okay, 11 cent difference. And in terms of percentage, we divided again 10 cent or 11 cent divided by the current market price of 65.5 cent. Okay, you are paying a premium of 16%. All right. But is it worth paying this premium of 16%? First, let us look at the operating margin. Okay, so it looks like on the current basis, actually, E-frame is having an operating margin of 23.11%. Okay, so it's been a good year. All right. On a trailing 12-month basis compared to the previous year of 16.61%. Okay, but more importantly, to know whether it is worth to pay your premium of 16%. Yeah, is it 16%? Of, yeah, 16% differential. It is most crucial for you to look at the operating earning yield. Operating earning yield is actually taking the operating net earning divided by the uh, current market cap, meaning market cap is actually the actual price today times the total number of shares. So this will sort of factor in uh, this particular operating earning yield to indicate if paying this premium is worth it. So after calculating the operating yield percentage, we see that there is still a 3.42% differential net plus. So this indicates that actually whatever is earned currently on operating is able to cover the current market price. And on top of that, it has a balance of 3.42%. And this will, going forward, reduce the PE ratio, which is now at, let's say 19, 18.9, 19. So going forward, the PE ratio will reduce, but I'm most happy to see my favorite enterprise value over EBITDA, which is the acquirer's multiple of 9.4. Anything 10 and below is a happy thing. Okay. Unfortunately, E-frame this year does not pay any dividend. It has a dividend yield of zero, but it has a free cash flow trailing 12 months basis of 4.25 million. It has a net debt of negative 26. So that shows that Econ Frame Berhad or E-frame is a net cash company. It has zero debt or doubtful account is zero. It has a Poitrovsky of 5. Normally, my performance delay should be 6, but because it is on recovery mode, so 5 indicates that it is on the way up. Okay, for a recovery company, 5 is an acceptable figure, but I hope to see the next quarter report coming out to be at least 6 and higher. All right. The Altman score, Z score, which measures if the company will face bankruptcy in 2 years. No, it has a extremely high score of 19 against 2.5. So if econ frame or E frame is in no mood of getting bankrupt in the next coming 2 years. All right. And the M score, which measures if the accounting accounts have been massaged or manipulated. Uh, the M score is minus 2.63. So looks like Econframe is reporting proper accounts. Uh, the minimum we need is actually minus 2.5. It is minus 2.63. Okay. Now let's take a look at the chart. Okay. Chart wise, it is confirmed that econ frame is actually on a trend with 3 higher lows. All right. And after the recent pullback of 2 long candles here, we see another 3 ascending green candle, indicating that it is gaining momentum again because the candles are above the Ichimoku cloud and also above the MA233 line. And the strategy employed for a buy-in is actually a pullback rebound. Okay, a pullback rebound. All right. Okay. Now, if we look at the reward to risk ratio, uh, after having passed the initial first risk management measure, the risk reward ratio at 65.5 closing as of half day today is 65.5, and if with a target of 82 cent and a stop loss of 61 cent, 60.5 cent. Okay. Econ frame, if we achieve our target of 82 cent, will yield a risk reward ratio of 3.4 times, which is good. Okay. Uh, and we can see that actually econ frame is now on uh, wave 4 going up wave 5. Okay, wave 4 going up wave 5. So we have quite a good distance and range for econ frame to achieve its price target. All right. And the most happy thing to note also is that econ frame has consistently see quite good volume, relative volume greater than 1 for the last uh, month or so. All right, meaning indicating that it is a bias intact market, bias in control. So with all these features put forward to you, 15 rational put forward to you, you decide if econ frame will be a good buy for you after my presentation. All right. And if you think this trading idea shared to you is informational and educational, please like, share, and subscribe. All right. And happy news is that if you subscribe to my YouTube channel, Trend is Friend, you get to join the TIFIC Investing Club for free. All right. I thank you for listening and for sharing your time and attention with me. And I wish you good day, happy trading, and